You're very welcome to this Great Academy lecture on accounting. I'm on chapter 1, and in this lecture 1.1, I'm going to do an overview of accounting in the sense of looking at general advice for the exam itself, looking at a report of the Chief Examiner of 2018, going through an explanation of an accounting system in general, and then looking at some problem adjustments and where marks or penalties can be avoided in the exam itself. Now, general advice for the examination. First section here is the timing of the exam. Now, in section 1 and section 2, they're both financial accounting. Now, section 1 is 120 marks. And if you like, question 1 is 120, where you have to do one question. Or you have two questions from 2, 3, and 4. Both of those questions are 60 marks each. Now, question 1, including reading time, should take you 54 minutes, not more than that. Or the 60-mark questions should not take you any longer than 27 minutes each, and that includes the reading time. Now, a change for the 2021 exam is that the examiner has now specified that you will have a choice in question 1. And the choice will be, you could do one of 2 questions from manufacturing, a company account, or a sole trader account. Now, section 2, there's been a change here as well. There's 3 questions, 5, 6, and 7, and normally you'll do 2 questions, right? And including reading time, they should take you not more than 45 minutes each to do. Now, the examiner has also specified that question 5 will now be a guaranteed question, which will be a ratios interpretation of accounts question. And then you'll have to do, there's 6 and 7 as well. So whichever way you want to work it yourself. Section 3 then, question 8 and 9, that's the cost and management section. You have 2 questions at 80 marks each, do 1, and then including reading time should take you not more than 36 minutes. Now, other general advice and kind of common sense advice really would be when answering questions on areas such as control accounts, depreciation, correction of errors, tabular statements, and so on, it's a good idea to use an open double page of your answer book to facilitate quick and easy reference from workings to solution. Now, what you don't really want is to be flicking over in back pages because it takes time and it's more likely that errors can happen. Also, as you know, you have plenty of paper in the exam. Always start on a kind of a new double page. That would be the good advice. Another significant aspect of your exam will be, now, for the 2020 exam and onwards, the answer book for the exam has changed significantly. And you would need to be aware and make yourselves aware of the style of this new booklet. And to do this, you can refer to Circular. You can Google it in Circular SO2/2020 State Exams. And I'll just go look at it here now. And here it is. It is the same paper, if you like, or script that's used in English and in history, and the same for accounting. Now, what is significant is if you look at the width of the pages, it's not as wide as previously. As well as that, instead of there being 30 plus lines in the actual answer book, there's only 24 now in this particular answer booklet. Okay, and then there's about 36 pages on it altogether. And the last 2 pages, and you'll see it here now in a second, the last 2 pages are the analysis columns pages. Okay, it's like an analyzed cash book. So if you're doing a cash budget or a tabular statement, you'll go to the back of the answer booklet. Okay, now my advice there would be to be a good idea to have, you can download it and print it off yourself and to use it when you're doing questions at home, or certainly when you're doing the mock exam. It's a good idea because that is a significant change in the answer script. Okay, now another thing to point out is it is not the examiner's intention that there will be additional paper available to students specifically for rough work. So everything will be on that particular answer booklet. That's the intention. So, you'd want to be used to that. Now, ensure your calculators are in good working order. Have a spare available. Now, often a non-scientific calculator, something like this with large buttons, can be more suitable for accounting. Maybe there'll be less chances of you making a mistake. Needless to say, show all your workings clearly. Now, another point I want to mention here is if a typic should be avoided at all costs in your exam. because what happens is, when scripts are passed around from car to car during the hot weather, the summertime, and very often the Tipex will crack and break up, I suppose. And when you open up the script, all that you see in front of you is a cloud of white dust. So the recommendation is, and the instruction from the examiner is, that you should really be using a blue or a black biro to actually answer your questions. But if you're going to use a pencil, be sure it's a high density pencil that can be easily read and won't fade. Now, decide which questions you're going to do in advance of the exam. The good advice normally would be that you'll do the questions that you think you're best at in order to get your confidence up, because you would be surprised, if you get off to a good start in any exam, but particularly accounting, that how well you could do in other questions that maybe you weren't quite as strong on, if your confidence was up. Okay, so decide on the order in which you will do the questions, that's fine. Now, theory, as you kind of know at this stage, is becoming increasingly important in accounting, and be sure to spend time on it. Now, so, I'm just going through that paper now again. So just moving on to the next section, which is the chief examiner's report after the 2018 exam. And there's nothing in it here that you won't be used to. And it is practice past examination questions under timed conditions. Read each question carefully before selecting questions to be answered. Show all your workings in order to obtain marks. You can't be penalized for poor workings, so always show your workings. Even if you think they look scattered, show them. You should always show them. And as much as possible, present neat and accurate work. Ensure all headings and labels are shown. Now, you're being told this all the time. Don't forget the theory. It's always important. Theory, really, I suppose, given, depending on your choice of questions, can make up to 40 marks, which really could be, 1 grade, 10% of your exam. Normally, or very often, you won't have any spare time to check the accuracy of your figures, but you would normally only do it at the end of an exam. Always in ratios, use the correct units of measurement. It's a percent, units of time, is it euro, whatever. Now, if asked to distinguish, it is not sufficient to give definitions of 2 items. Like, for example, distinguish between the methods of depreciation, straight line and reducing balance. It's not just enough to give a definition of both. You must make a distinction between them. Now, answer questions. The answers to questions should be specific to the actual question asked. For example, in question 6, 2018, question was asked about the role of an auditor in relation to the protection of shareholders. However, many students just gave a list of the functions of an auditor, but did not relate it to shareholders, and as a result would have lost marks. Now, don't forget, a conclusion is always required in the commentary for ratios, and in as much as you can, accounting should always be studied for understanding. And that's what I'll be trying to do as we go through the questions, trying to get you to understand why we do certain things in accounting. Now, on page 3 then, and this kind of hopefully will help you with your understanding, is an accounting system. Now, with financial accounting and with cost and management accounting. Now, for the most part, we're dealing with financial accounting, which is kind of a record or a historical record of all the financial transactions of a business. And so what happens is, okay, you must have proof that an actual transaction happened. And these are just the source documents. Okay, there could be invoices received or sent. There could be credit notes, whatever, receipts, checkbook stubs, you name it. They must be recorded somewhere, and that record is in the books of first entry. Now, what are the books of first entry? You have a purchases book for purchasing goods on credit. You have a sales book for selling goods on credit. You have a returns book, which can be sales or purchase returns. You have a cash book. Any transactions that go through a cash book are recorded in your cash book. And then any other, what we would call unusual entries, would go through a general journal. Now, a cash book, because so many transactions go through a cash book anyway, right? It's both a book of first entry, but it's also an account in the general ledger. But it's done separately. Okay, but anyway, all of these transactions must be posted somewhere. And this is where the double entry kicks in your ledger system. And I suppose it's useful to remember that what we do is every account, if you like, in a business, in bookkeeping, is either an asset or an expense, or a liability or an income type of an account. And we debit all asset and expense accounts, and we credit all liabilities and income accounts. And then for every debit, there has to be an equal and corresponding credit. And then the cash or bank account, very simple, you'll debit all money in, and debit it obviously on the left-hand side, and you'll credit, which is on the right-hand side, you'll credit all money going out of your bank account. Then when you have all of the entries posted, you balance the accounts in the ledger, and then you list all these balances in a trial balance. And what you need to happen is that the total on the debit side is equal to the total on the credit side. And if it is, if they're the same, well, you're 99% sure that you have done your double entry bookkeeping correctly. If not, what sometimes happens is you force the trial balance to balance by entering in a missing figure, a suspense figure, if you like. But that must be investigated, and cleared out. Now, when your trial balance is done, you then go on to prepare your final accounts, things like your manufacturing, your trading profit and loss appropriation, income expenditure, your balance sheet, published accounts. These are all different versions of final accounts. Okay? And then from that, you can get more information or glean more information by preparing a cash flow statement to establish the cash position of a business, and ratios then, extract ratios to see, okay, how well is a business is doing compared to last year, or comparing it to businesses in similar industries. And then you have this thing here, variance analysis. Well, variance analysis now will come in with your budgets. When you have your actual results, you can compare your actual results with your budgets to see are there any variances and to see why differences may have happened. And then here in cost and management accounting, it's broken up into two sections really, which is your marginal costing, if you like, which is also known as break-even analysis or cost volume profit analysis, or absorption costing, which is also known as product costing or job costing. Now that's costing. And then you have budgeting. And budgeting is, I suppose, estimating what's going to happen in the future, where you have a series of mini budgets, 1 to 9 there, and all of those are used, if you like, to form or to help you prepare your cash budget, and then your master budget, which is your manufacturing, trading, profit loss, and then your balance sheet. And a question I would think that's waiting to be asked at some stage is to do a comparison of what is the main differences between financial accounting and cost and management accounting here. Now, okay then. So then just moving it on again, problems then that come up in the accounting exam. Okay, could we deal with, now these typically would come up in a club, service firm, or farm account question. If you had a receipts and payments account, an extract of it, and you had something like 9 months interest from 4% investments, we'll say €1,200, and then on the credit side, loan and 18 months interest at 8% per annum, and it was paid on the 30th of June 2020 for 28,000. Would you understand or know the significance of what's involved in doing all of this? Hopefully you will. Now, dealing with the investment interest first. Well, if we are getting investment interest, that means, whether we're told it or not, that we must have investments there in the first place. And we're going to have to work out how much are those investments. So what we do is we say, right, we take the investments and say, right, 9 months is 1,200. So how much would 12 months be? Well, it would be 1,200 by 12 over 9, which is 1,600. Now, you'd ask yourself the question then, what value of an investment would you need at 4% per annum to give you an interest return of 1,600? And the answer, of course, is 1,600 multiplied by 100 over 4 or divided by 4%. And that figure is 40,000. Now, that figure of 40,000 would be, they're your investments, and that would be an asset in the accumulated fund, but also would be in the financial assets in the balance sheet. Not forgetting the investment interest itself. The amount received was 1,200. Now, we've established that the full figure receivable is 1,600. So therefore, the 400 must be, it's a balancing figure, and must be due. So it's a current asset in the balance sheet. And the full 1,600 is the amount receivable. So that's the figure that goes in as income in the income and expenditure, or profit and loss if you're doing profit and loss. Now, similarly then, we have the loan and loan interest. Now, I'll just put myself over here for a second. Okay, so that was 28,000 and it was 18 months. So can we deal with that? Well, hopefully we can. Well, you'd ask yourself, in percentage terms, what does 28,000 represent? Well, it's 18 months interest at 8% per annum. Per annum is per year. So 1.5 years interest, well, 8% is a year, so another half year is 4%. So in total, the interest is 12%. So 112% is equal to the 28,000. So 100% is the loan. So 28,000 by 100 over 112, that gives you the loan figure of 25,000. And that would be a liability in the accumulated fund. And not forgetting, it would not go in, as a long-term liability in the balance sheet because it has been repaid. It's gone. The loan interest then, well, is 28 minus 25. The interest itself must be 3,000. Now we must break it up. How much of that applies to this year? Well, it was repaid on the 30th of June. So 6 months, 6/18 applies to this year, which is a third of 3,000, and that's 1,000. So the other 12/18 must have been due since the start of the year. So that 2,000 would have been a liability in the accumulated fund. Now, regardless of which question comes up, you will definitely have to deal with this idea of investment and investment interest and loans and loan interest due and the loan interest applicable to the year in question. Now, finally then, in this lecture, other problems that feature, and that is, first of all, common adjustments, light, heat and fuel, and insurance. Now, okay, light, heat and fuel, will take this first of all. You could be told that in the receipts and payments account, there was a payment of 1,250. Well, what do we do with stocks of fuel? We add the stock at the start because that's what's used this year, and we take away any stock at the end because that wasn't used this year and therefore will probably be used next year and shouldn't go into this year's accounts. Now, if there was an amount due, if you like, to the electricity or to the ESB, if you like, Electric Ireland now I think it is, at the start of the year, well, what it means is 1,200 of the 1,250 payment, 240 of it related to last year's accounts, so we have to take that away from the 1,250. And if there's an amount due to Electric Ireland at the end of the year, well, we haven't paid for it yet, but we have used it, so therefore that should be added to the expense for this year. So the used figure and the figure to go into the profit and loss will be €1,205. That stock of fuel at the end will be a current asset. The Electric Ireland or the ESB due at the end will be a current liability. Now, if you are someone, that's the vertical format. Now, if you do it in a T account format, well, you know your accounting. It is the purest way of doing workings, if you like, but it doesn't suit everyone. Some people prefer doing the vertical format, just find it easier. But if you're doing your workings in T account format, you know your accounting, and I would have no worries for you. Another thing that features is this idea of insurance. Now, this catches people out very, very often, and just watch it. It's a simple mistake to make. And something like this. If you had 4 months insurance prepaid at the start of €600, and there was an annual insurance premium paid of 2,400. So how do we deal with that? Well, I suppose if we're doing the vertical format, it would be bank figure of 2,400. We'd add on the amount that was prepaid since last year of 600. That gives us 3,000. And then we take away the amount prepaid at the end, which is 2,400 multiplied by 4 over 12, which is 800. And therefore, the actual cost, which is the P&L figure or the expense, is 2,200. Now, not forgetting that 800 insurance prepaid is a current asset. What's the mistake that people make? The mistake that people make essentially is they add on the 600 to 2,400, and then they get 4/12 of the 3,000. Which is not correct because that 600, is all related to this year. So the 4/12 shouldn't apply to the 600. So a mistake that some students make is that when they add the 600 to the 2,400, they then get 4/12 of 3,000 instead of the 2,400. The point here is that the amount that is prepaid until next year is 4 months of the payment of 2,400, not of the 3,000. And once again, we have the insurance account in the T account format, and that's how it would look in a T account format. Now, the last item in this lecture is this idea again of investment interest due. Is it a financial fixed asset, or is it a current asset? Well, first of all, any investment interest due will always be other income in a profit and loss account or an income and expenditure account, whichever it is you're doing. Now, if that investment interest due is part of an investment fund being used to repay a loan in a lump sum, then the interest is tied into the fund and should be included with the investment fund under financial assets. And normally that will feature in an incomplete records question where, where they're putting money aside into an investment fund. So if the interest is part of the investment fund being used to repay a loan, it is included, in the investment fund under financial assets. Otherwise, the investment interest due should be classified under current assets. Now, so these are all small items, but marks, your 1 and 2 marks can easily be lost if if you're not sure about those or you make the errors. Hopefully you won't now that you've seen this mentioned here in this lecture. So now, okay, I'm going to leave lecture 1.1 at that. So thanks for watching the lecture. Thanks for tuning into the Great Academy. So I'll see you again in lecture 1.2, where I'll deal with other items, problem areas that feature in the accounting exam. So in the meantime, best of luck with your studies and happy learning.